Today we are going to review Meta's latest numbers and extract key meanings as its shareholders. First, its revenue grew 22% in 2025 and EBIT grew by 20%. Taking a step back, Meta has two business segments. First is Family of Apps, which includes Facebook, Instagram, WhatsApp, and Threads. And its second arm is Reality Labs, which has both AR and VR components. However, most of its revenues and all of its EBIT comes from this first segment. And even in here, most revenues are generated by advertisement. So we will first take a detailed look at this advertisement revenue. As we can see in this long-term trend, before Apple changed its privacy policy in 2022, Meta was generating very high rates of growth between 20 to 50%. Although it had difficult times in 2022 and 23, in recent 2 years in a row, it seems like Meta has overcome this issue completely. Looking at its quarterly numbers, we can confirm that since the second half of 2023, Meta is now generating pretty consistent growth from its ad segment. And we can divide this ad growth into two components. First is ad impression delivered, and second is the price of those ads on average. And if we see in 2023, when company was still struggling, although the company was showing more and more ads to its users, the effectiveness of those ads were low, so the price of those ads were actually going down. However, as Meta successfully utilized machine learning and AI into advertisement segment, the balance has come back between the increase in ad that's shown to customers as well as solid growth in its price. DAP, which is the total number of users using Meta's app, has reached over 3.5 billion users. And as we can see here, this user growth has been pretty consistent. Although it has gone down from the highs during the COVID crisis, it's still juicing out between 4 to 7% of growth in terms of the number of users that's using the FOA. Now let's move on to the margin that Meta is generating from this revenue. Looking at the total, Meta generated 41.4% margin from its revenue in 2025. However, this total number includes both the Family of Apps as well as the Reality Labs. And as we all know, this segment is generating loss from its revenue. To be exact, even though the revenue is stagnant as we can see in the blue bar, the loss generated from this segment is actually increasing year after year. And as a portion of total EBIT, Reality Labs is using about 20% of profit that's generated from the FOA segment. So if we exclude these losses from Reality Labs and just focus on the FOA, we can see that the margin is actually above 50% for 2 years in a row. And also we can see Meta is generating higher margin than during the COVID boom period as well as before those privacy restrictions. And this trend is also clear if you look at the quarterly LTM rolling number for the past 5 years. Although it has slightly come down in the fourth quarter, we can easily expect Meta to generate about 50% of EBIT margin from its FOA business. Next, revenue diversification is an important theme as we look at Meta's business today. First is from messaging. And this messaging can be divided into two parts. First is click-to-message and second is paid messaging. Click-to-message is a form of advertisement. When users click the ad, we can directly send messages to the businesses. And the second part, which is paid messaging, it's similar in that users are able to talk to businesses through this messaging. However, instead of advertisement where the ad is shown to new potential customers, this paid messaging is where SMBs use this to communicate with its already existing customers. If you look at the CTM business first, in late 2019, company said this was the fastest growing ad format. However, because this is a new form of advertisement, it's rolling this out very slowly. But by 2022, the run rate for these click-to-message ads increased to $10 billion. And such new forms of ads is the main reason how Meta's users are increasing about 7%, but the number of ads that it shows are increasing way higher at 18%. So Meta is renovating new ways of advertisement without making its users tired of it. And the second paid messaging part is also showing very good trend. In Q1 2024, this stream of messaging avenue surpassed $1 billion annual revenue run rate. But by the fourth quarter of 2025, this crossed $2 billion annual run rate. And as we can see here, even though this part is still a very small part of Meta, its very high growth and very high marginal profitability makes this a segment that can generate important part of revenue going into the future. And as we can see here, the TAM of this messaging part is increasing steadily throughout the years. And because Meta can utilize its AI tool to help small businesses communicate with customers, this messaging part has high potential for Meta's growth going forward. Second, revenue diversification is by regions. As we can see here, 2 years ago, about 50% of Meta's revenue came from US and Canada, and 25% each from Europe and rest of the world. However, in 2025, the US portion decreased to 43%, and although Europe stayed about the same at 24%, the rest of the world generated about a third of Meta's total revenue. So this decrease in dependence on US and increasing diversification to the various parts of the world is making Meta's business more stable. Now move on to the expense side, and the most important item for tech company, which is employee compensation. The total number of employees, as we can see here, decreased heavily in 2023 as Zuckerberg focused on profitability, and overcoming the difficulty came from Apple's change in privacy policy. However, after that, Meta steadily increased its employee count again. This is not all bad news because the productivity of those employees increased, as we can see from this revenue per employee multiple. In fact, before the change in Apple's privacy policy, per employee generated about $1.5 million, but more recently, the number has gone up above 2.5. And this increasing trend is actually very encouraging for the future profitability of the company. However, regarding the compensation, the SBC, stock-based compensation, is showing a negative numbers. As we can see here, although the number of employees has changed, the SBC has increased very steadily throughout the years. In fact, if you look at per employee SBC number, it has gone up way higher compared to low hundreds before 2022 to above $250,000 per employee in 2025. And since Meta made headlines hiring people by paying them very high stock options and formed the Super Intelligence Lab in 2025, this number is expected to increase. But even worse for shareholders is that Meta is running out of cash. And that brings on to the next topic, which is Capex. As we all saw from the news, Meta has announced very aggressive Capex plan for 2026. This is on top of what market felt very aggressive 2025 Capex of $72 billion. And if we look at this Capex in terms of portion of revenue, in the past, Meta spent about 15 to 25% of its revenue in Capex, but this number has gone up, now reaching 50%. Let's take a closer look at this number based on the cash flow context. In 2025, Meta generated $115 billion of operating cash flow, and next year, it's expected to generate $135 billion. Here, we need to exclude the Capex that is expected and already spent in 2025, so we can get the cash flow available for financing. This is the amount that can go to the shareholders. And since Meta pays about $5 billion per year to pay dividends, and this means next year, there will be almost no money that's available for share buybacks. However, as we saw before, the SBC number is increasing very steadily, so increase in share counts without the buybacks means there will be dilution for shareholders. So it looks like the only way to overcome this is borrow more money. So now let's move on to the Meta's borrowing capacity. As we see here, Meta used to have no or very limited amount of debt in the past. However, as it increased investment into AI, the debt number has increased significantly. Up to this point, Meta actually held a lot of cash on its balance sheet as well, so it was in net cash position. 2025, and now Meta officially has more debt than it has cash. And if you look at this debt number in terms of EBIT multiple, now it has reached it 1 times. Actually, this 1 time is not so bad. The companies with Meta's quality can easily have about 3 to 4 times of this multiple. However, as we saw before, what's concerning is the trend, as well as the fact Meta will be burning cash more so than it is generating for the foreseeable future. And since Meta's making heavy investments, everything now depends on artificial intelligence to generate revenue that compensate for the investment. And this can happen largely into 3 parts. First is, as we saw before, Meta can utilize AI to increase its advertisement and messaging revenues throughout its FOA segment. Second is the Reality Labs, through its VR headsets and AI glasses, can better utilize AI to generate value for its customers. And lastly, as we saw through its recent M&A of Manus and the creation of Super Intelligence Lab, Meta can generate completely new ways of revenue using its AI investments. So these are 3 high-level key points that we saw today. And if this was helpful, please click like button below and subscribe to the channel. And I'll see you guys again in next company analysis. Thanks guys.